So we're going to take another look at another chart using the dip buying method and how you can utilize the dip buying method to maximize your gains and take some bigger profits instead of just buying stock. So to clarify, the dip buying method is a useful trading strategy that a lot of traders use. It's definitely one of the most basic trading strategies. And it's just the emphasis that the market's always going to go up, and you'll probably hear memes about it. Again, buy the dip, BTFD. Buying the dip is probably one of the most easiest trading strategies you can do. So when it comes to options, how does this work? Buying the dip is a bullish strategy. So you would be buying calls because you want to maximize the potential of your profits based on the chart going up. What's the risk involved here? The risk involved here is if you pick the wrong strike, if you pick a short expiration date, you run the risk of your contract losing all its value and you lose all your money. So we're going to just look at a couple charts here, a couple of call charts on AMD, just because with, chip names like Nvidia, AMD, they've had a lot of volatility over the past year or so with all the AI news. So let's take a look at the AMD chart. So here's the AMD daily chart. And again, if you look back here, back in October, it's been going up since then, and it hasn't really had a big pullback. But the biggest thing about stocks is volatility, and typically if there's a really, really big run up, the chances of a pullback are very high. Not saying this works every time. Obviously, there are a ton of other factors that can go into why a stock's moving up or down, but a lot of people will start taking profits or selling off. If you look at AMD in particular, we can see that things were running. We had the Santa rally, the end of the year rally, and you see that AMD was running just like the rest of the market into the new year until Friday when there was a big sell-off across the market. That would be December 29th. Today is January 4th, 2024. So if you're looking at how this played going into the new year, again, AMD was kind of running up. It started selling off on Friday as the year ended. It opened up on Tuesday, kept selling down. And then yesterday on Wednesday, January 3rd, we had a red day, but today it's finally green. It looks like it's kind of gained some momentum and starting to move up. So how would you play this? This would be a perfect time to buy the dip. This would be, if you're looking at the AMD chart, AMD was up here at 151, the high of 151. It was a 52-week high. So if you're looking at that, like AMD ended the year at a 52-week high. So opened 2024, big red day. The market had a big red day pulling back. And now it's stabilizing here. It kind of has this little consolidation area, kind of dipped below this 135 level, came back today. It's green today. And you can see now that it's stabilizing. This would be a good opportunity to buy the dip. How would you do this? You can buy the dip and you just buy shares. And if, have your stop loss, I would say like around 135. And then if you break that, you sell off or you sell it and you cut your losses quickly. Or you have all this room here. So there's a potential for a big bounce here if we get some bullish news going into this year. I would have to look at the calendar for the economic calendar to see if there's any kind of big catalyst coming up or things that affect the market. But I need to take a look at the calendar. But anyways, if you're looking at it from just a technical standpoint, it's a good time to buy the dip. Never buy at highs. Never buy calls at highs. If you're going to short or buy puts, that's on you. Hopefully you respect your risk management. But now that it's pulled back, it's probably a good time to buy the dip. So we can come back and look at this next week or so and see where we're at. But let's take a look at these calls. So these are 140 calls. The reason I'm looking at 140 calls is because if you see this pullback, 140 is well within range of this chart bouncing back up. So if you were going to buy 150 calls, you'd probably want to get a longer time frame. That's based on your risk reward ratio. I'm not going to give you financial advice. Do with your money whatever the heck you want to do with it. But 140 looks like a nice number. So if we're looking at the 140s for next Friday, they had a high ending the year at 1186. Again, with calls, you're controlling 100. Again, with calls and options, you're controlling 100 shares. So you're going to multiply this number by 100. So this is $11,186. Depending on your trading account, that may or may not be within reason of how you're trading. But right now, these calls are only worth $182. So that's the basis of saying that it was up at 150 at the end of the year. Of course, data's come into play because now we're a week closer to expiration date. These are next Friday, so it's about 6 trading days away. But you can buy these out. I mean, even if you're looking at the 145 calls, here's the 145 calls for next Friday. They were at $819 last week. And that Thursday before they started coming down on Friday. Right now they're down to 67. So you have all this room to go up. So your risk to reward here is pretty high. You could have a 2-to-1, 3-to-1, 4-to-1. Depending on what your risk tolerance is, I would say this is a pretty safe trade. You're risking $67 to potentially, you could have your stop loss here at 50 cents. I would just say this would be a great example of buy the dip, because chips have been very strong. If the market continues, then we keep continuing bullish into this year. A lot of people are very bullish right now because of going into an election year. There's a lot of reasons to be bullish, but then also, if you're all over, the X and Reddit, some people are on the opposite end, and that's just a basis of bulls and bears. That has nothing to do with it. As long as you follow your strategy, your risk management, it shouldn't matter if there's people that are bearish or bullish, because you need to respect your money, respect your stop losses, and respect your system, and it really shouldn't matter. Play the chart that's in front of you. A lot of the best traders say that. Play the chart that's in front of you. Try to block out the noise. I've definitely had a problem with reading too much and taking too many people's opinions, and then I start second-guessing myself, and then I don't respect my rules, and then I don't stop out, and then I don't admit that I'm wrong. So that's a video for another day, going over common mistakes that traders make and how we lose money very, very quickly, because I've definitely lost a lot of money not following rules and learning how to trade, paying my market dues. But here's a good example of buying the dip. So what I would do here is you could just buy these calls. It could bounce. You see how far it came down. Typically, I would say that stocks come down faster than they go up. So I would feel more comfortable buying the 140s here. Let's take a look at maybe something further out. So these are the 150 contracts for March 15th. So 3 months out, a little over 3 months out. And again, another example of buy the dip. These calls were worth $1,305 back in 2023, the end of 2023 on Thursday. So it actually opened up on Friday at a high of 1305. So again, by times 100, $1,305. And today they're down here at $575. So a good opportunity. You have a nice risk to reward here, depending on where you put your stop loss. You can put your stop loss here at $5. You're risking $75 to potentially make, looks like $600, $700, depending on where you take profits. I'm not necessarily saying that you should take this call, but buying the dip, if you were looking for a safer, longer term trade, would definitely be to take a further dated call. Reminder, the risk with trading options, you can lose everything. It's not like buying the stock where at the end of the day you still have the stock. And say you buy a share of AMD today at 136.50 and tomorrow goes down to 120. In 3 months it's 120. You still have that share. You lost $30. If you buy the call for $575 and in 3 months it's down to 120, you're losing all that money. So definitely understand the basics of options. I do have another video going over the basics of options trading. I'm going to continue making some videos like that, try to simplify it, try to go over techniques that you can use, strategies you can use. But if you're a dip buying AMD, this would be a good time to buy it. If you're bullish on AMD, if you're bullish on AI, if you're bullish on the market, it looks like AMD can be a solid trade. We could probably take a look at Nvidia, see how that is, because typically AMD goes off of what Nvidia moves. Nvidia is definitely the stronger of the chips, but some of the other ones move around with it. So Nvidia looks like it had a smaller pullback. It started actually bouncing yesterday, at a green day yesterday, and it's kind of gone up faster. So that's, that actually looks not like that looks really good. If you would have bought it yesterday at the green day, you would have been up substantially today. But again, Nvidia trades at a higher price, so the options are more expensive. Taking a look at these calls for Nvidia, the 480 calls, they ended the year up here at around $25. That was on Friday. The market came down, Nvidia came down. They were kind of fluctuating, and then Tuesday, big sell-off to start the year. So Tuesday we had the big sell-off to start the year. Nvidia kind of held, though. It's kind of held this level, but it did gap down overnight. And then Wednesday it did bounce, kind of pull back up, and then end up closing green. But you could have played it a couple of different ways. You could have, depending on your risk level. Again, risk level, risk management, biggest thing when trading, especially when it comes to options, because there's so much more volatile, so much more to lose. or depending on how you look at it, you have a higher reward scenario. If you were to dip buy this, you buy Nvidia, you could have waited till today. You could have bought it at the market open. It looks like it pulled back a little bit as well. This is a 10-minute chart for Nvidia. So you can see like yesterday on Wednesday, after that big sell-off on Tuesday, bounced towards the end of the day, consolidated, but it was still a red day, so not necessarily a good day to dip buy. Unless you're trying to catch a falling knife, which I've gone over this in another video. You can lose a lot of money trying to catch a falling knife. I don't recommend trying to call the bottom of a stock. I recommend waiting for it to turn green, trying to stabilize and bounce. So this would be a good opportunity to dip buy Nvidia based on your time frame and your rules. That's how you pick your expiration. That's how you pick your strike. If you want to see a video going over how to pick strikes and expirations, let me know in the comments and I can make a video going over just that specifically. But here we go. So it started bouncing yesterday on Wednesday, bounced quickly, and then it kind of lost all those gains that it made in the morning. Bounced up, lost all the gains it made in the morning, kind of just started chopping around. But it was still a green day. It still ended green. It still held this level. So you could have bought this yesterday. You could have bought this yesterday for, around $800, $850. And today you would have lost a little bit depending on what your stop loss was. But if you looked at the actual chart, you would have never really broke this level. So you still would have been bullish. And if you would have held it through the day, you would be up right now a couple $100, about 20% or so, 25%. So Nvidia didn't really have the big movement that AMD had, and also Nvidia trades at a higher price, so it's a lot more expensive to buy calls. So let's go back to these AMD calls. We're going to go to the 145s. So these are the 145 calls expiring next Friday. Once again, they were worth $800. They're down currently to $68. So there is a good risk to reward here because you can risk $68 to potentially make $400, $500. This doesn't even have to bounce all the way. It just needs to kind of keep having movement up. Maybe it gaps up tomorrow. On Friday, you could take some good profits. If you read the book Trading in the Zone, which I highly recommend, he goes over some different strategies and how you can utilize those systems. So trading essentially is just utilizing all your different strategies and finding something that works for you. These patterns and this strategy, specifically dip buying, is a very, very common strategy, a very popular strategy. What I've noticed over the years is that my best results have been with dip buying. My worst results are when I'm just trying to force a trade and just trying to buy something there because it's moving up, or trying to chase, or FOMO. But that's a video for another day, going over mistakes that traders make and how you lose money quickly. But yeah, that's pretty much that's essentially it. That's essentially what dip buying is. You're going to wait for the stock to pull back. You're going to pick your strike, pick your expiration, and buy it. A lot of people, what they'll do is they'll be like, oh, I kind of want to wait for a better price. I want to wait for a better price. It might go lower. Now that it's starting to stabilize, now that AMD here has stabilized, this is a good spot to dip buy it. And follow your risk to reward. If you're buying stock, you don't have to worry about it. You just buy the stock and, keep dollar cost averaging in if you're investing. If you're just trying to capitalize on the movement, if you're trying to buy, you could buy calls hoping for it to move up next week. This is a good spot to buy calls. But looking back at this AMD chart, it was primed, it was set up, it was a great opportunity. And so I'm going to look back at that and look at where the chart is now. So taking a look at the AMD chart here, this is where we were at last Thursday when I was making the first part of that video. And now we are 4 trading days later on Tuesday, January 9th, looking at where we're at now. And we're back up here almost at 150. So if we go back and look at that clip of me analyzing the chart, talking about how AMD was set up for a good risk reward, we can look at the option chain and look at the calls and see how we could have maximized our profits on this move. You could have turned $200 into $2,000 using calls, and with very little risk. I mean, at that point, you're risking $200, your upside being up to $2,000. So for the 10 to 1, if you were to risk it all, even if you would have had a stop loss in place for 50%, you were still on an upside on Friday, and that would have massively increased over the weekend and going into Monday, especially going into today on Tuesday, January 9th. So if we look here, this is the 150 calls for January 12th, 2024. That would be calls expiring this week. Now, again, we were looking at these contracts last week where AMD wasn't looking too hot. The calls were not looking too good, especially at 150. But what was the reasoning behind targeting the 150 strike? again, if you go back and look at your AMD chart on Thursday and Friday, we were having that pullback. So really the pullback started happening on the Friday sell-off ending the year of 2023, and then Tuesday opening 2024 pulled back. Wednesday we talked about it stabilizing. Thursday it was having a green day, so that would have been a great time to buy. You could have even bought it on Friday, because at this point the calls were kind of still in the same little area. So Thursday we're right here, we're hovering. If we go to the daily to see the structure on this, so if we look at the daily here on the call options, you had a range of 16 cents and to a high of 32 cents. So you could have bought anywhere on there on Thursday, anywhere from 16 cents to 32 cents, which translate that into options. You're looking at $16 or $32. So you could have bought one option for $16, you know, at the low up to a high of $32. Looking at Friday, you had a low of 18 cents and a high of 48 cents. So again, manage your risk. Pick your spots. Don't buy at the top. But if you would have gave yourself a little bit of leeway and bought this around 20 cents a contract, which translates to $20 a contract, you could have bought 10 contracts for $200. The fees would be pending on which brokerage you use. And if you want me to make a video about brokerages and fees and where to pay fees and which ones don't, we can do that as well. Let me know in the comments if you want me to make a video talking about option fees. But in this case, say you're using something like Webull, which I think might have a charge now on options trading, probably a very small charge. If you're using a big brokerages like Fidelity, Charles Schwab, E-Trade, they do charge a higher fee per contract. But if you're looking at this chart, if you would have purchased this anywhere in this range, your risk would have been, again, you're losing 20 to make possibly, at the time I said you could have gone up here up to like $5 a share, which translates to $500. So you're looking at a $20 investment to make $500. You're risking $20 to make $500. So you're risking at 10 contracts, you're risking $200 to make $5,000 possibly. If you would have taken that trade, you would be here. And now we are 3 days to expiry, so we're still 3 days out. This can continue. So what are you looking at here now? What do we analyze here now? We analyze if AMD is going to break the 151 high that it had 2 weeks ago. This was ending the year on Friday of 2023, ending the year on December, I believe, 29th. Yeah, we ended the year at a high of 151.05 before it came back down, stabilized, started going back up. So looking at the daily here for AMD, we would have bought here, sold up here. Once again, you could be looking at this trade and saying, yeah, but you would have got lucky. You can't get lucky if you don't take a trade. I would not take this trade now. I would not get anywhere near this. The way to look at this is to take a look at this and analyze new charts and see where this pattern can reemerge, because as of now, your risk to reward here is very limited. You could be getting in and you could be risking, you know, if you bought this contract right now, it's going for $211, which would be $211. And you're 3 days out. So this has a chance to bounce back to you know, AMD has a chance to hit this high and reject and start coming back down, or it could break and go. And then, you would have to wait and play the breakout. So there's different ways to play this. When using the dip buy strategy, the play is gone. The play was back here. The play was back here on Thursday or Friday. You could have bought the calls here on Thursday or Friday, giving yourself a very minimal risk for a high possibility of return. Say you bought 10 contracts. You could have sold half of those contracts yesterday in the dollar range, which translates to $100 per contract. So you could have sold 10 contracts that you bought for $100. Again, assuming you bought them at 20 cents each. So you would have spent 5 of those contracts would have cost you $100. You could have sold those same 5 contracts for $500 for a 5-to-1 reward on that. Or you could have held them all today, and even today, it did open up a little bit lower, but we're still green. We still have some days to expiration, and we're currently trading above the $2 mark. So depending on when you entered this trade on Friday or Thursday, you would be up over 10x right now. You'd be up 1,000%. You could have turned $20 into $200. You could have turned $200 into $2,000, or you could have turned $2,000 into $20,000. So obviously hindsight is 2020, but once again, I want to reiterate, You can't get lucky if you don't take a trade. So I will be making a video talking about risk management and how to situate yourself for something like this, because again, this was not a guaranteed thing. I am never going to guarantee profits. This is not me giving financial advice. And especially now at the time of me uploading this video, I am not recommending to buy AMD at all. With my strategy, with the dip buy strategy, the opportunity is gone. I'm just using this as a way to analyze a trade and look back at what I could have done. I only bought a few contracts, so again, I didn't really maximize what I could have done here. But so again, this is just a way to look at calls and puts and how you can maximize your profits using options. What are the mistakes people will probably make? Now, if you're up 10x, you should sell it. You know, again, this isn't meant to be financial advice. This is just for entertainment purposes, looking back at how this trade could have been executed. But if you're up 10x, especially if you have multiple contracts, you can start selling bits and pieces. So maybe you're selling 8 contracts and you have 2 left to see where this goes. Tomorrow's Wednesday, which is going to be putting us at 2 days away from expiration, at which point these contracts will start losing value, especially if AMD starts pulling back. Now, AMD is currently strong. We can look at Nvidia, which Nvidia is hitting all-time highs. Nvidia being the chip leader, this is very bullish, but you can take a look at this. This would have been a way bigger bet than AMD was. So if you're looking at Nvidia, if you would have taken these contracts back on Thursday or Friday started going up a little bit higher. But let's look at the weeklies for this week. You could have bought these contracts last Thursday or Friday. So Thursday, they're looking at around, you had a range of a low of 220 and a high of 381, which again, you multiply those by 100. So one contract of Nvidia would have cost you $220 at a low, $381 on a high on Thursday. If you look at Friday, you have a range of 297 to a high of 680. So again, your low would have been $297. Your high would have been $680. Depending on where you bought that contract, you could have got anywhere between, say you bought one contract in here for $500. You're risking $500 to possibly make. Today is trading at $4,235, $4,235. That's the current price that these calls are trading at. These are the 500 weeklies for Nvidia. If you would have purchased these last week, you would have had a whole week of time to run out on the expiration date. These are weeklies, so again, I wouldn't recommend buying these now. The breakout has occurred. You could have looked at this on Monday, yesterday on January 8th, and Nvidia broke that range, that resistance zone that it had for a little bit. So you could have gone long yesterday if you were playing the breakout strategy, and you could have stayed long in today. This is not intended to be financial advice. Nvidia is currently trading at all-time highs. I think a lot of smart traders will recommend to never buy a stock at all-time highs. I think a lot of investors will even say don't chase a stock at all-time highs. This is probably the opposite of a great investor like Warren Buffett wouldn't be buying this stock right now. You wait for an opportunity. You wait for the FOMO to dissipate. If anything, you start looking for puts. Now, I am not recommending puts at all, especially the way the market's posed right now. We have a very strong market after that pullback and to start the year and to end the year in 2023. To start 2024, the market is currently pretty bullish. You know, SPY is kind of heading back up, so I wouldn't recommend this right now, but this would be a good opportunity to start checking out if you want to purchase puts. So what would you do here? Now we're at the end of the spectrum. Now we're opposite the dip buy strategy. Now we're looking at puts. The thing about puts is, again, it's kind of the same as calls, and you're going to limit your downside, because if you short this, if you were to short Nvidia and Nvidia takes off, your drawdown can be endless, because again, if you short a stock, your losses are infinite. As high as the stock goes, if you don't close out, you can blow up your entire account. With puts, your downside is going to be limited to what you put into that contract. So if we're looking at Nvidia, say we look at Nvidia, so we went up $40 in 2 days, over $40 in 2 days. But if you look back to this $500 mark where it was before, you can think that maybe this support zone, you can say that maybe this resistance zone can turn into support. So what are we thinking? Targeting $500, you can look at puts for 2 weeks out, which would be 26. So these are the puts. So these are the puts for Nvidia for $500 for 2 weeks out. I personally wouldn't do this yet, because I would wait to see I would wait for Nvidia to start slowing down, wait to see that momentum stuff, maybe wait for the first red day. That's another strategy we can go into. But if you look at this now, that's when things are ugly. There's a lot of room here on these puts. There's a lot of room here on these puts. These puts were trading up to $43, which was, again, is $4,355 back on December 11th, about a month ago. If you're looking at them currently, they're trading at $3. So $300, you can buy a put for $500. Now, time is on your side a little bit, so you're not going to get back up here because you're running out of time. These are 2 weeks out. So with the holiday being next week, the market being closed on Monday, you have less time to hope for the volatility. So I would wait on this and see if it's going to start pulling back or not. But that's what I would be looking at. I'd be like, okay, time to buy puts, because the reason I would say $500, because you could be targeting that zone. You could be targeting this resistance zone and think that maybe it's going to turn into support. So if Nvidia does start pulling back, it's going to pull back at least to 500, where it could probably base again, and then you're looking at possibly it turning around and bouncing or breaking below that. But your risk to reward here is favorable to the downside. It's not a guarantee. There are never guarantees in the market. For all I know, this can be Nvidia can be $700 in 3 days. So again, maybe some news comes out, the government invested in chips. I know there's a thing going on right now with Pelosi's position. Nancy Pelosi is strongly leveraged into Nvidia. She has some really deep in the money calls that are expiring in December 2024. So for all intents and purposes, Nvidia is extremely bullish right now, but you never know. When things go up, when something goes up, it must come down. So there could be a pullback in the future here for Nvidia, for chips, and that would be a way to look at the downside and how to maximize it. If you look at it here, there was that, it hit $500 and rejected, and these same puts, if you're looking at this day, this was $12.29. So if you go to $12.29, you could have bought puts here at $17 and sold them up at a high of $32 back when, right when it started bouncing, when we're talking about like last Wednesday. So that would have been a good time. You would have had a decent risk to reward there, but that would, depending on what your stop loss was, it could have been 2-1. Maybe you had a 50% stop loss, but you could have made some good money on that. But as you see now, the further and the higher that Nvidia goes up, the greater the fall can be if you're patient. One of the biggest things that successful traders preach is patience, psychology, respecting your stop loss. I plan on making another video on talking about the most common things that new traders make, or that losing traders make. And I know these things because I made a lot of them. I've made a lot of mistakes, and I try to take every mistake and learn from it. My biggest mistake being not trusting my stop loss, not respecting my stop loss, not admitting when I'm wrong. I do that too often, and I'm doing a lot better now, but that has always been my biggest downfall. It doesn't matter how much money you make, and you can make 10 grand in a week and lose 10 grand in 20 minutes. I know because I've done something like that. So again, those are market dues. You're not going to learn unless you do. There is no get rich quick scheme in the stock market. There are only setting yourself up for favorable conditions, for good positions. You cannot get lucky if you don't enter a trade. And if you're, fear of failure, I think, is a bigger driving factor than the highs of success. I think that your fear of being wrong keeps a lot of people out of trade. If I was wrong here, if I was wrong on this AMD trade or Nvidia trade, you have the stop loss. But again, this was a possibility for a 10-1 trade if I would have followed through, if you would have followed through on this trade. I'm going to try to be a lot better about uploading my videos faster so that we can catch these in time and look back at them. But again, the only way this would have worked is if you would have trusted your instincts, you would have bought down here, respected your stop loss, whether your stop loss would have been breaking these lows. As soon as something happens that you expected to happen or didn't expect to happen, you need to get out. If you bought these with the intention of, okay, well, if AMD, goes red again and breaks, then we're cutting our losses, we're getting out. But if you hold it with the intention and the dedication in your thesis, trust your thesis, you would have been up 10x, So again, this is a way to look at calls and puts and how you can maximize your profits. If you would have bought straight stock, if you would have bought AMD here at 135, you could have made, $13, $14 a share. Depending on how much money you had, it would take millions of dollars to make anything off of that. So you would have had to buy 10 shares for $1,350 just to make $140. Or you could have bought one call for $200 and made $2,000. So again, the risk reward is there. But what would have happened if you would have bought shares? If it would have gone against you, you still would have had those shares and you could have held them. But that's another story for another video. So we're just looking at calls and puts and what could have been with this AMD trade. So hope you guys enjoyed this video. Let me know what you want to see. Let me know what you want to talk about. Let me know if there's any kind of charts you want to analyze or look at, and I'll be sure to get that going in the next one.